Nvidia owns about 85% of the overall GPU market at the moment for data centers. They have just a very big kind of stranglehold on that. One of the big issues is supply versus demand. There has not been enough supply of these chips to meet the demand, which has really fueled a lot of the revenue growth and why they're still growing at 122% on revenue kind of quarter over quarter. Let's talk about what you need to know before the bell this morning. Of course, the big news last night, Nvidia reports earnings and really kind of knocked the cover off the ball. Very strong revenue growth, up 122% over last quarter. Still seeing earnings, both top and bottom line, beat estimates by a decent margin. And also announcing a $50 billion stock buyback. So it's another $50 billion on top of the buyback they were already doing. Of course, remember the company just split their stock 10 for 1, so that put a lot more shares out there in terms of the amount of shares they have available to now buy back from that stock split. So adding another $50 billion in that buyback, of course, is going to provide support for the stock price. Now, after the earnings last night, the stock traded down pretty sharply. It was down about 6-7% last night after the bell. That's mostly recovered this morning. I think I looked at the stock price pre-market just before I came in here. It was down like 2%. But it's still weaker than, it's not up 10, right? And this is what we had discussed earlier this week. Mike and I had been talking about this, and we wrote in SimpleVisor that we had basically just trimmed our positions back in Nvidia because if you look at the probabilities versus possibilities of the earnings announcement, there was a lot more weight that there could be a disappointment in that, and that would certainly put some pressure on the stock. So we did take a little bit of profit just before the earnings announcement, and again, that's that helped here shield a little bit. But one of the big kind of concerns is always about supply and demand of these chips and GPUs. Right now, basically, Nvidia owns about 85% of the overall GPU market at the moment for data centers. They have just a very big kind of stranglehold on that. One of the big issues is supply versus demand. There has not been enough supply of these chips to meet the demand, which has really fueled a lot of the revenue growth and why they're still growing at 122% on revenue kind of quarter over quarter. And they're about to introduce their very much anticipated Blackwell chip, which is the next generation coming up from Hopper, which is the one that's basically they're selling now. There was a delay to the development of that chip, but that now seems to be behind us, or at least behind Nvidia. And expectations are very high for demand for that chip because it is the next generation, and there's a lot more demand for that chip than there is supply. So the current revenue growth for the company does not seem to be impaired at this point, but the rate of growth is going to become more problematic simply because of the size now. Remember, it's kind of the law of large numbers. As revenues get larger, as earnings get larger, it makes it harder to continue to grow at 100% every single quarter. Expectations for revenue growth over the next quarter's example down to 85%. That was a little bit weaker than expected. And expectations for deliveries going out into next year was a little bit softer than the more. And again, when I say softer, it's still very strong. It just they just didn't blow the cover off the ball. They beat estimates, they beat expectations across the board, right? The earnings report was very strong, but it was not comedic, which is what it has been over the last several quarters. The size of the beats were so large, it was just amazing, and that didn't happen this time. So that's one of the reasons the stock is trading down here a bit this morning. But again, a big recovery from the initial kind of knee-jerk sell-off last night. But two things here, and this really ties back to the overall market. Nvidia makes up 6.5% of the S&P and almost 12% of the NASDAQ. So it's a very big weight in the market. So goes Nvidia, so goes the market really more than anything else. But very similarly to the markets, Nvidia rallied back almost to its all-time highs. There's a good bit of resistance here, and we're now starting to see a deterioration in momentum in that price advance. And so if we flip over and take a look at SPY, which is the S&P 500, you'll see exactly the same thing right now. The market has rallied back to previous all-time highs. We're starting to see a loss of momentum in the overall market. And so again, kind of paying attention to this is that as Nvidia goes, kind of so goes the market. And if this disappointment in earnings continues, we could see a little bit more weight on the S&P. Again, we've had a very, very big rally here up to on this recovery from the lows. We're starting to see that first initial sign of deterioration of momentum. The buy signal is beginning to weaken, heading back towards a potential sell signal. So again, as I said earlier, September tends to be a little bit weaker trading month. We've had a very, very nice recovery from these lows. So if you were kind of shocked by that downturn and were really stressed about this downturn in the market, it means you have too much risk in your portfolio. This is a great time to start looking at rebalancing your portfolio, looking at just taking in some profits, reducing some risk, raising a little bit of cash, because we're going to have another correction here probably before the election. As I wrote about on Tuesday, that article on our website now at realinvestmentadvice.com, we've got a lot of overbought indicators in the market that really suggest a near-term correction is possible. Not major, 3 to 5%, something like that, but something to relieve some of this kind of short-term condition. But watch that momentum. It is deteriorating. That's what you need to know before the bell this morning.